happy to have Coach Pete back with us today from Capital Financial to help us prepare for a comfortable retirement. In your book, you talk a little bit about future-proofing our retirement savings. So what do you mean?
Well, Joanna, it's tough these days. I mean, we're busy going to work, taking care of kids, and then all of a sudden retirement's here. So what do? I mean, we have to think about what we're going to need in the future to make sure we are comfortable in the future and don't have to continue working in retirement.
I get that.
Retirement's supposed to be fun. So how do you future-proof it? Future-proof means make sure you have enough money isolated away from any of the events that could happen. And we've seen plenty of events happening, right?
We sure have this year, for sure.
We haven't had a volcano yet. That's the only thing we're missing, right?
Okay.
I don't want one. UFOs, they see that, right?
Yeah, we saw that recently, right?
So unidentified financial objects, so a lot of people have in their portfolios too.
Okay.
That's a true UFO, and that's when you don't really understand what you're investing in. And I know a lot of people that are watching right now have those kind of things in their portfolio, like what is this thing doing? How much is it costing me? We put this much in years ago and it's not worth much more than that. What is our broker doing for us? Has our broker even talked about retirement? And unfortunately, that doesn't happen a lot of times. So what we like to do is sit down with our folks and figure out what they like to do now. More importantly, what do they want to do in the future? And this is when it's pretty funny, when we have two spouses there. One spouse wants to travel, one spouse wants to sit home and watch Beverly Hills Cop or whatever, like all rerun movies. So what are you going to do there? Well, we have to have enough money for you to both to be able to do what you want to do. And then we need to make sure we put money in a place that's going to be there and be in the correct amount when we get to retirement. That's tough. All
right, and you have a guideline for this. It's called your Rule of 100. So explain what that means to people, because it's sort of your guideline for what you need to have saved.
The investment Rule of 100 basically says whatever your age is, you put a percent after it.
Okay, so I'm not going to tell you my age, but we'll just let that out there.
I'm 54, so
okay.
54%. Now, 54% of my money should be in a place I can't lose it due to the market. And that's not just the stock market, it's a real estate market. A lot of people think real estate is extra safe until they put money in, and you have to pay tax every year to hold the property or not. If you don't, they auction it off on the courthouse steps. So you have to make sure that in my case, 54% of my money needs to be in a place that I can't lose it due to the market going up and down, real estate market. So I need to have a place of safety. And then I can take 46% of the money and just keep it at risk. That's just a rule of thumb, though. That gives the viewers an idea of what they really should be doing going forward all the way through their financial lives.
Absolutely, and as we get older, there is a time where we should sort of dial back on the risks, right? Absolutely. So at what point should we really be evaluating the risks that we're taking with that money?
I call that the financial red zone, and that's when we're 50 or above. Things start to get closer in the rearview mirror.
Yeah.
You ever had anybody tailgating you? That's retirement coming up on you right there. And so we need to make sure that we get our money in the right place, and the right place is not going to be one place that can be wrecked into. So we need to have it isolated with airbags all around it. We call it financial airbags. So we need to make sure we have some of our money, and more as we get older. 50 is a good age to look at it, though, because a lot of people watching, most of their money's in 401k plans, all risk. Maybe in stocks, bonds, mutual funds, all risk. Bonds are risky too, by the way. Bonds can go down in value. So we have to know that there are some alternatives that can give you lifetime income. I call it GPI index, growth, protection, and lifetime income. And if folks haven't heard about that, you really need to give us a call.
Absolutely. So you're going to help them get that money out of the risky situations into a safer situation. It's great to have an expert on your side. Where can people go to hear more from you and get in touch with you about their personal financial situation?
A really cool site to go to is PeteOnDemand.com. My name's Pete, and On Demand. You can download audiobooks that are for sale on Amazon, but they're free on my site. I've written 8 books. You can even get free books, free reports, free calculators. Everything is free there, and there's no games or gimmicks. And then if you are wanting to get that real plan, we'll offer that to the next 10 people who call us.
Perfect. Thank you so much for being here today.